welcome to the second video of the Art of Trading with Ichimoku. Alright, let's delve a bit deeper into Kumo, which is one of the vital components of Ichimoku. As you may recall from the previous video, Kumo, also known as the cloud, is the shaded area that lies between two senku lines. Big and thick Kumos indicate that we have significant price fluctuations and many levels of support and resistance in the past. As a result, these fluctuations have created a strong support or resistance area in the present, making it difficult for the price to break through. When you use candlesticks or any other method to draw support and resistance lines, you often confuse which levels the price will ultimately react to. And this state of confusion gradually turns into a feeling of anxiety and concern, which can directly affect the results of your trades. In the Ichimoku system, Kumo can rescue us from this confusion. In fact, it can free you from drawing various support and resistance lines based on different methods, many of which are more harmful than helpful. Therefore, based on everything that has been discussed, this thick green Kumo here represents a very strong support area that candles cannot easily penetrate, and even if they do, trading inside the Kumo carries a high level of risk. In the upcoming chapters of this video series, I will teach you how to trade inside the Kumo in specific situations. However, we have a long way to go before we get there. When it comes to the Kumo or cloud breakout, candles often prefer areas where the Kumo is thinner. This tendency, however, is not a hard and fast rule, and you'll learn counterexamples as you go. Unlike a thick Kumo, a thin Kumo suggests that there have been relatively fewer fluctuations in that particular area in the past. Almost everywhere you read about Ichimoku, the most important trading strategy is introduced as follows. When the price, Tenkan and Kijun, are all positioned above the current Kumo and Chiku is out of the price action, and the future Kumo is also green, it can indicate the beginning of a strong uptrend. Conversely, when these elements are below the current Kumo and the future Kumo is red, that's a good sign that the bearish trend might continue. While this strategy can be effective at times, I haven't used it in years. I've traded with the Ichimoku system for over a decade, and in my opinion, there are plenty of situations where you'll find much stronger signals to confidently enter a buy or sell trade. Also, feel free to get creative and assign unique names to Tenkan-sen and Kijun-sen that resonate with you. For instance, you could call Kijun-sen the hunter and Tenkan-sen the hound, while referring to candles as the prey. Visualize the hound constantly tracking down and bringing the candles to the hunter. The purpose of this approach is to shift our perspective on Ichimoku away from a rigid and inflexible viewpoint to developing a closer connection with its components. This will enable us to gain a better understanding of their functions. By treating your charts and trading system as trusted companions, you'll achieve more favorable outcomes. So let your imagination soar and come up with names that hold personal meaning for you. Candles usually tend to retrace towards the Kijun-sen when prices diverge significantly from it, and the Kijun enters a period of flatness for a while. For instance, imagine the price going on a wild ride, either shooting up or plummeting. Suddenly, the Kijun decides to take a break and stay flat for an extended duration. In that kind of situation, traders need to anticipate how price will react. This will include a notable change in trend, a substantial retracement, or at the very least, spending some time in a sideways correction. Considering these circumstances, paying close attention to the Tenkan-sen's behavior holds great significance. For instance, in this example, we can observe that the Tenkan has acted as a strong resistance line for an extended period of time. Even when the price managed to break away from this resistance to some extent, the Kijun immediately came into play, acting as a secondary layer of resistance, keeping the price below it and maintaining downward market momentum. It's critical to remember that when there is a sudden spike in price after a period of consolidation, it usually does not undergo a significant trend change immediately after the spike ends. Instead, it first enters a channel and then transitions into a trading range. These three phases represent the main market cycles, which typically unfold in the order given. However, I will provide a thorough explanation of these fundamental market cycles in a separate series dedicated to advanced price action concepts. But, considering the nature of this video, which focuses on Ichimoku strategies, I prefer not to deviate further from the main topic. Therefore, we could have anticipated that the Kijun might hinder price trend changes during the initial and second movements. However, after a while, the Kijun returned to a flat state. This is a warning sign that downward momentum is slowing down. Experienced traders can recognize this drop in momentum by observing it visually. However, for less experienced traders, the RSI indicator can be highly useful. It acts as a reliable guide and confirms a clear divergence between price and the indicator, a sign that momentum is waning. Continuing on, when we closely examine the behavior of the Tenkan Sen, we realize that as it moves below the candles, it undergoes a transformation from acting as a resistance to serving as a support. Therefore, the hypothesis of a trend change in the market is further confirmed with a high probability. As you can see, the price then experienced a strong counter-trend movement, followed by a prolonged period of consolidation, or what we call a trading range cycle. Here's another scenario that may interest you. If the Tenkan and Kijun come together without any distance between them, then you should be prepared for a big move in the market. Here, you can see that after spending some time above a thick green cloud, the price suddenly breaks it with a strong bearish candle. Additionally, in this situation, future Kumo turns red and both Senku lines start moving downwards, while Chikou span separates itself from the price and the cloud, residing in the open space. But the most significant thing that captured my attention was when Tenkan and Kijun came together. This can create formidable resistance to the price and lead to a major market downturn. Moving forward, as Kijun Sen flattens out, the price pulls back. However, this upward move gets halted by the formation of a doji with a long upper shadow, known as the evening star. This is a powerful reverse candlestick pattern which is formed exactly below the cloud. Meanwhile, we can see that Tenkan and Kijun again come together. So, here Kumo, Tenkan and Kijun form a strong barrier that hinders the price from crossing it. So, it might seem wise to enter a sell trade here. Moving forward, we can see that the Tenkan Sen is like a super strong resistance line, holding the price down and keeping it in check. At the same time, the Kijun Sen backs it up by confirming the price drop. But after a while, the Kijun Sen starts acting all flat, as if it's putting the brakes on the price. That's when we start seeing signs of downward momentum slowing down in the market. And here's the interesting part. The Tenkan Sen switches roles from resistance to support. In that case, if you got into a sell trade at higher levels, now might be a good time to consider exiting the market. Another remarkable aspect of the Ichimoku strategy that I haven't found in other trading systems is the unique type of support and resistance that Kumo creates in certain situations. If you have been involved in the markets even for a short period of time, you are likely familiar with horizontal and angled support and resistance lines. A horizontal support or resistance level is drawn based on swing highs or swing lows, while diagonal support or resistance can be represented by trend lines or channels. However, Kumo introduced a different way to think about support and resistance. In addition to creating support and resistance in the mentioned manner, Kumo can also generate support and resistance lines in the form of zigzags, convex or concave, or other shapes. This is just one of the distinguishing features of this trading system compared to indicators that, at best, only show you the general market direction, but with a big margin of error. One of the highly powerful formations of multi-layered support and resistance in the Ichimoku system occurs when both the Kijun Sen and the Kumo are exceptionally flat and align with each other. In such a scenario, if this solid support or resistance level is broken, the price is likely to experience significant volatility and make significant moves. In this example, we can observe that after a prolonged downtrend below a powerful Kumo, the price is clearly losing its downward momentum. Then, with a spike move against the trend, it initially shows an inclination towards a trend reversal. However, as you can see, there is a thick Kumo ahead, which makes it challenging to break through. After that, the price spent some time in a consolidation phase, gathering its forces. At the same time, you can see how Kijun Sen and Kumo are flat and aligned with each other for an extended period. Therefore, if the price breaks through this powerful barrier, it could trigger an explosive move. As you can see, the price has finally moved past this area with a strong bullish candle. This gives a final signal for entering a buy trade. But how do you know when to get out of the market? The Ichimoku system has various methods to set profit levels. However, in this case, we can use another level where Kijun and Kumo aligned in the past. This is a potential exit point for all or part of your trades. Following the breakout, the price retraced back to this level and continued its upward move, so we might see more gains. Another place to exit your trades is an area where Kijun and Kumo have formed consecutive peaks, which I have marked here as a yellow-colored band. We will come across many such areas in the future, but it seemed like the right starting point to introduce their functionality. Upon reaching this area, the price strongly reacted and ultimately put an end to its intermediate-term uptrend. As you can see, the Ichimoku trading system is comprehensive and independent. You won't need additional tools like Fibonacci or identifying support and resistance based on candles to find entry and exit points for your trades. It's a big advantage for traders and keeps them safe from confusion. Alright, I think I covered a lot in this video. In exchange for the info I shared, I want to ask something from you. But my request is not to press the like button or subscribe. I'll leave it up to you. What I really want you to do is open the chart right now and practice what you just learned. Do some backtesting to find areas where Kijun Sen and Tenkan Sen confluence. Pay attention to subsequent price movements and their speed. Record the results on paper or in an Excel table. Additionally, observe what happens when Tenkan Sen changes its role from resistance to support or vice versa. This is especially critical during the late stages of an uptrend or downtrend when the market is clearly losing momentum. Make note of any exceptions and analyze them as well. That was it for this session. I hope to bring you more useful tips on Ichimoku trading in upcoming videos. Stay tuned.